Ever found yourself eyeing that must-have item online, the one that would absolutely change your life, or at least your Tuesday, only to be slightly intimidated by the upfront cost? You're scrolling through the payment options, and you see it. Sezzle. It promises to break down that price into smaller, more manageable chunks. Suddenly, that item feels a whole lot more attainable. But a question pops into your head, a question that might be lingering in the minds of many of you watching right now. Is Sezzle a credit card, or is it a loan? That's what we're diving deep into today. Because understanding the financial tools you're using is crucial, not just for your current purchase, but for your financial well-being in the long run. We're going to unpack exactly how Sezzle works, dissect its features, and compare it to traditional credit cards and loans to give you a crystal clear answer. Now, before we get into the nitty-gritty, let's acknowledge why this question is so important. Credit cards and loans, while both offering ways to pay for things over time, operate very differently. Credit cards offer a revolving line of credit, meaning you can borrow up to a certain limit, repay it, and then borrow again. They often come with interest charges if you carry a balance, and they significantly impact your credit score. Loans, on the other hand, typically involve a fixed amount of money borrowed for a specific purpose, with a set repayment schedule and interest. They also affect your credit score. So, where does Sezzle fit into this picture? It's part of a growing category of financial services known as Buy Now, Pay Later, or BNPL. These services have exploded in popularity, offering consumers a seemingly seamless way to split purchases into multiple installments, often with the promise of zero interest. This convenience is a huge draw, especially in today's fast-paced online shopping environment. Let's break down the Sezzle experience. Imagine you're on a website and proceed to checkout. Among the payment options, you see the Sezzle logo. You select it, and you're typically asked to create an account or login. Sezzle then assesses your eligibility for their service, often in a matter of seconds. If approved, you'll see a breakdown of your payments, usually 4 installments spread over 6 weeks, with the first payment due at the time of purchase. One of the key differentiators of Sezzle and many other BNPL services is the emphasis on being interest-free for the consumer if payments are made on time. This is a significant departure from the traditional credit card model, where interest charges can quickly accumulate if you don't pay your balance in full each month. So, if it's interest-free under certain conditions, and it allows you to pay in installments, is it a loan? Well, in a way, each individual purchase you make through Sezzle could be considered a short-term loan. Sezzle is essentially extending you credit for that specific transaction, allowing you to receive the goods or services now and pay for them later in installments. However, it doesn't function like a traditional term loan where you borrow a lump sum and repay it with interest over a longer period. And it certainly isn't a credit card in the traditional sense. You don't receive a physical card with a credit limit that you can use repeatedly at various merchants. Sezzle is integrated at the point of sale on participating websites or apps. Each purchase through Sezzle is a separate agreement, unlike the revolving nature of a credit card. You can't just keep spending up to a limit and then make a single monthly payment covering all your Sezzle purchases. Each purchase has its own distinct payment schedule. Now, let's talk about the crucial aspect of fees. While Sezzle often touts its interest-free model, it's important to understand where they make their money. They primarily charge merchants a fee for offering Sezzle as a payment option to their customers. This is why you often see BNPL services integrated seamlessly into the checkout process. The merchants are essentially paying for the convenience offered to you. However, consumers can incur fees if they miss a payment. These late fees can vary, so it's absolutely essential to read Sezzle's terms and conditions carefully. Missing payments can also potentially impact your ability to use Sezzle in the future. While Sezzle doesn't typically report to major credit bureaus in the same way that credit card companies do, repeated missed payments could lead to collection efforts, which could then negatively affect your credit report. This is a critical point to understand. Even though it's often presented as a convenient, interest-free option, there are still financial obligations and potential consequences for not meeting them. Another key difference from traditional credit cards is the absence of a minimum monthly payment percentage across all your Sezzle purchases. Each individual purchase has its own fixed installment schedule. You can't just pay a small portion of your total Sezzle balance to avoid late fees. You need to ensure each individual installment is paid on time. Furthermore, Sezzle doesn't typically offer rewards programs or other perks that are common with many credit cards, such as cashback, travel points, or purchase protection. The primary benefit it offers to consumers is the ability to spread out payments for purchases without incurring interest, if paid on time. Let's consider a scenario to illustrate this. Imagine you want to buy a $200 pair of shoes. If you choose Sezzle, you might pay $50 upfront and then $50 every 2 weeks for the next 6 weeks. If you used a credit card and carried a balance, you would likely accrue interest charges on the outstanding amount. If you took out a personal loan for $200, you would have a fixed repayment schedule with interest calculated over the loan term. Sezzle, in this scenario, acts like a series of short-term, zero-interest, if on time, payment agreements tied to that specific shoe purchase. It's also worth noting the underwriting process. While Sezzle does assess your ability to repay, the checks are often less stringent than those for traditional credit cards or loans. This ease of approval is part of the appeal, but it also means that it might be easier to accumulate multiple Sezzle payment obligations across different retailers, potentially leading to financial strain if not managed carefully. The allure of breaking down costs can be powerful, but it's essential to look beyond the immediate convenience and consider the broader financial implications. Are you truly budgeting for these payments? Are you relying on BNPL for essential purchases because of a lack of funds? These are important questions to ask yourself. In conclusion, while Sezzle offers a way to borrow and pay later in installments, it operates differently from a traditional credit card with a revolving limit or a term loan with a fixed repayment period and interest. It's a transaction-specific, short-term payment plan that is often interest-free if managed responsibly. Treat each Sezzle purchase as a financial commitment, just like any other form of credit, to avoid potential fees and ensure a healthy financial future. With that said, thanks for watching, and until next time.